Fed December FOMC minute. Let's see what this PDF say about next Fed FOMC. One of the FOMC member Waller completely changed market sentiment. What all of these FOMC members say. So these comments are coming after Fed FOMC, after FOMC minute. So until you do not know what was written in minute PDF, you cannot compare that he was hawkish or dovish and what will happen next. Let's see first line. Financial condition index is driven by decline in interest rate, equity price increase and depreciation in dollar. So FCI is combined effect of everything. So financial conditions are easing and that was the biggest reason. You see gold flying. Stocks like JP Morgan, they were up constantly and they changed their direction after earning report. Because you can see if there was change in FCI and FOMC is directly talking about it, then biggest beneficiary was JP Morgan Bank. If you remember, they were ready for 7% rate hike, but they stopped at 5%. And you can see it is written easing in financial condition reverse some of the tightening that occurred over summer and much of fall. And that was big change in FCI and that's why there was big change in market in November and December last year. And there are many charts of FCI, one from FOMC and Bloomberg, and most famous is Goldman, and which you cannot see in TradingView, that's why it is free. So if FCI change its direction from easing to tightening, then those trends can reverse. And you can see weekly trend are changing. Another line you can see policy rate may be at peak. In December FOMC meeting, while saying rate cut, this was the first time they said rate hike is over. And that's why it is written peak level of Fed fund rate of this tightening cycle has been reached. And they are also saying first reduction in policy rate would occur in June. They are clearly saying the timing about first rate cut. And this is the thing which news company will never tell. So market was expecting first cut in January FOMC meeting. Now they are expecting in March, but FOMC minute is saying about June. You can see it is saying data available at time of December 12. So this is the information forecast based on information available before December FOMC meeting. And if you see after recent CPI number and Red Sea crisis, things are changing. And we have to see in next FOMC meeting what Fed will say. Because from US economy only change was CPI number, while external factor was war news. They are saying most major foreign central bank keep their policy rate unchanged. That's indirectly saying G7. That means ECB, BOE and BOC. And biggest speculation will be who will cut first, Fed or ECB. Just few minutes ago I said they are saying first cut in June, and now they are saying in this PDF 25 basis point below its current level by May 2024. So they are giving month timing and they are giving rate size. That first cut will be 25. After Fed Waller speech, some market participants are expecting the first rate cut size 50 basis point. This is after Fed Waller speech after that strong CPI number, while minute is saying 25. And that change in size from 25 to 50 will create big market price action. Next, spillover from falling USD yield, below expectation reading on global inflation, oil price drop, and large decline in foreign yield. Since last FOMC meeting, things have changed. You have seen inflation going up again in many countries, especially your G7, and your oil sentiment have changed after war news, and FOMC member tone have changed again after that CPI number. So things which were happening during December FOMC meeting, they are now changing in opposite direction. And how Fed react in next FOMC meeting, that will be interesting. Next, lag effect of monetary policy action. They did hike in 22 and 3. Effect are coming. They can come this year, maybe next year. But before effect start economy collapse, they are already saying rate cut. And lag effect basically mean they hiked in past, now economy must go down. Like NFP must be 0 or negative, or ISM PMI that is now at 50. Next step it go towards 40. That is lag effect. And that single line will create many confusion for trader, because lag effect will say something why economic indicator like NFP and PMI, while Fed rate decision will say something. According to lag effect, if past hike is saying NFP and PMI must go down, that's mean low number. That mean if they cut now, then future NFP and PMI number must go high. And now confusing thing will be, at current time you will trade low NFP number or future high NFP number. They also saying possible that economy could evolve in manner that would make further increase in target range. Like that high CPI number are changing tone of everyone, FOMC member and market both. And Waller yesterday said that CPI number was noise. They are clearly ignoring that CPI number, because all the time they only care about PCE number. So if things change, like CPI keep increasing, or more dangerous thing, NFP stay strong, then two possibility: either they hike again, or keeping rate at current level for longer than previously anticipated. That means higher for longer. So timing of first rate cut can change from June to maybe September. In this PDF, they are saying lower target range for Fed fund rate would be appropriate by end of 2024. Ends mean fourth quarter, and there is an election in November month. And they are not saying directly about election possibility. So either they cut after election, that means starting December, or before election, that means the rate cut start before November and do multiple cut. So that November FOMC, because of election, that is highly political. Either they do multiple cut before November, that means June, July and September, or after election. So they have already said about 3 rate cut, not giving timing. Let's see how it happen. But this will happen before election. Another important thing, slow pace of runoff, appropriate advance notice to public. They are talking about QT. Their balance sheet size is decreasing. They printed money in March last year. They are decreasing again. But they are saying before this thing stop, stay there. They will give advance notice. Since FOMC minute PDF, every day FOMC members say something about QT. You can see news company are directly talking about it. And last time they did, market almost crashed. So they are doing same like written in minute PDF giving advance warning. So official announcement can be in this FOMC meeting, otherwise we have to wait till March. So decreasing balance sheet size speed, stop immediately or slowly. That will be important thing in next FOMC meeting. And you can check all the detail in Wall Street Journal article. What they did last time and what can happen this time. If you read carefully, they are saying take into account cumulative tightening of monetary policy, inflation, economic and financial development. So they are saying combined effect of everything. After December FOMC meeting, war news are increasing every day. So inflation dynamic are changing every day. And you have high CPI number. So especially after last FOMC meeting, biggest focus will be Fed comment on inflation. Because this time you have big change on inflation. They have also said about international development. Let's see what say about war in FOMC meeting. Important line in this FOMC minute for beginner trader. You can see achieving its macroeconomic objective. And if you simply search Google about macroeconomics, then this is not easy thing. And until you do not know what is macroeconomics, how you can understand what are macroeconomic objective, what happened in past, what is happening now, and what can happen in future. Because here you are speculating central bank, and it is not ordinary central bank, this is the biggest central bank which represent biggest economy. So here you need high level of macroeconomic understanding. If you search most famous book site could read and go to macroeconomics, follow the link, then these are most popular economics books in macroeconomics section. Until you do not read this book, how you can understand what are macroeconomic objectives? For example, this book directly about USD JPY pair. And same thing happening right now which is written in this book. And this book which started macroeconomics, the beginning. And for example, this book. And if you have not read these two books, how you can understand what will be macroeconomic objective of Fed before election this year and after election? Because last year 2023, Fed in his speech many times directly said about Paul Volcker. Think this way, this is new books about economics, first biography of Milton Friedman. After I said on Twitter, now everyone is talking about this book. There is a huge fan following of Milton Friedman and he was there in last stagflation. And second stagflation cycle is happening again. And if you do not know past and you don't know what is happening in the present, then you will trade against Fed monetary policy and their macroeconomic objectives. If you want more book about macroeconomics, then I have already made 2 videos last year. You can follow my another channel. I have one more short video channel. For example, this video, soft landing. This is textbook definition. Before that CPI number, everyone was talking about soft landing. After that CPI, everything changed. So these are one of the main, or you can say number one objective of Fed, achieving soft landing. So either you read 500-page big size book or watch this short video if you are beginner, or if you like macroeconomics, then this is most valuable information which came from Minute PDF. Advance notice to public about QT.